The market panics, then absolutely rips higher on CPI data. Is it time to be looking up? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about two potential paths, one lower and one higher, and it looks like we may have actually gotten both. In a wild day in the market, we saw a 140-point drop on the release of CPI data. Then they found a bottom around 3,500, which happened to be the 50% retrace from the all-time highs to the COVID lows. From there, they ripped it 180 points higher in a very high-volume bullish day with a bullish close. Now the question is, should we continue to look up? I'll get into that in just 1 second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the S&P 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, so as I mentioned, it was a wild day, but we navigated it effectively. As you can see on the screen, we're helping new traders learn the market and learn how to react to the market and trade the market. So if you want to be part of that, check out later in the video for that. For now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500, okay? And so we got the big spike down before in pre-market down towards our 3450 target. They came up a little short at 3,500 and then spiked it to the rest of the day back up to 3680 in a huge rally. And so with that, we have to look at some factors that would tell us that we are in a rally. So some of those things are we bounced off the 50% retrace off of the COVID lows. That's a pretty good support level. We have a bottoming signal on the weekly chart. We have bottoming signals on the daily chart. The bigger the chart, or the bigger the time frame on the chart, the bigger the bounce. Typically, weeklies get 300 to 600 point bounces or more, depending on where we're headed. And so we have that. You have a huge high volume reversal bar where they spiked it down really hard, bought it all the way back up, gave you a very positive day on big volume. You have clear seller fatigue. When inflation data came in hot, they tried to sink the market and they couldn't break the 3,500 level. I think the sellers are just getting wore out here. You have massive divergence on the 1-hour and daily charts. You have massive oversold levels on the 1-hour and daily charts. So the market is primed for a pretty substantial bounce here. We have a very full pattern to the downside. I do think we see this bounce, but as always, we have alternate counts. So let's go through our two counts that we're looking at. And we'll go through the primary count first. So the primary count is our bullish count. It's an ABC up that would give us this B wave up here. So it would look like this off of the low. So we've started this big move up. You get a move up towards about 3810, somewhere in that level, the 236, a move down in B, and then a C wave to complete the A wave of that move. Then you get the B wave pullback. Then you get C up towards that 4,200 plus level. And the reason we have 4,200 plus as the level, guys, is one, it challenges the August highs, which we would want to go back and test. And two, it's between the 50% and 618 retrace of the all-time highs. So a very common level for a wave B to hit. So that's 4155 up to 4309 is where we would expect that B wave to land. I think it'll be probably in the 4,200 plus region because that would get a little higher up and challenge this a little bit more and give you kind of that double top at a lower level here. And then we should see that C wave down from there towards the 2,500 to 2,900 area. To be clear, if you watched my big picture video a couple days ago, it's a very bearish outlook that I have. And for now, I have definitely put the bulls well on the back burner. They're going to have to really prove it to me to prove that we are trying to get some kind of bigger rally than just a bear market rally up. So keep that in the back of your mind. If we see something different and they start to break through key levels, we'll see structures that will change, and then we might entertain the bulls one more time. But for the most part, I'm treating all rallies as bear market rallies until proven otherwise. For the bearish perspective, okay, that is going to be that this move down here instead of this wave 5 is actually all of wave 3 down. Okay, and then we'd be bouncing this 4 here. I have a 4 with a question mark, so this 4 just moves over to this peak. So we'd have all of 3 down, then you'd have 4 up, and then 5 down into that 3250 to 3450 target area we've been talking about. And so in that case, you'd look for an A, B, C up into this 3760 to 3839 area. And then you'd look for a move down in wave 5 towards that 3250 to 3450 area. Okay, so that's what you're looking for. The primary count is the green count. The alternate count is the red count down, where we'd look for that wave 4 up and then wave 5 down. And then we would still look for this ABC, wherever we bottom, okay? But the primary right now, based on all of the things I mentioned earlier, is the green count with the move up towards 4,200. Over on the NASDAQ, okay, with the new low on the ES syncing up with the NASDAQ, that puts things back in sync. Also, another reason to kind of feel like this could be a low that we're building off of is that the NASDAQ was making lows while the ES wasn't. So now the ES and NASDAQ are both in sync. They both have the same low, and they're trying to build off of that. Same type of patterns here, guys. We're looking for that ABC bounce up where you get an A, B, C up and a pullback in B, and then a 5-wave move up in C, and we can define those a little better as we get into those legs. But for now, we're looking for an ABC up and A, pullback in B, and then up in C. Now, one thing I didn't mention on the ES chart that I do want to mention here is a lot of times when we are as oversold as we are, the structure doesn't give you a big B wave back, okay, and then takes off again. So this could be a very shallow pullback. We've seen, I believe last October, a 400-point move straight up. So we've seen these types of oversold rallies get very vertical very fast. So keep an eye out for a shallow B wave if they do start to rally and continue this, and then another push higher after that. For the bearish count, guys, same setup. This number 3 would move down, and this would be all of wave 3 here. This number 4 would just move over, and we would look at a potential bounce up in 4. Okay, towards the 11,800 area, and then a move down in 5 towards that 10,000 to 10,000 or 9,500 to 10,000 area below. So that is what we're looking for on both charts. We have one up move that we think is going to be the primary path, the pretty strong rally, and then the potential for one more push lower into the target areas we've been talking about. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link, and it will take you right over to our webpage. Once there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial because I want you to get in there, make sure you love it, and become part of our trading team before you ever spend a penny. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, as well as all of your Elliott Wave questions answered. We do trade the SPY and the QQQ, and we swing trade, which means our trades can last anywhere from a few days to a few months, so we don't trade quite as often as a day trading room does. However, if you are looking for day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that just crushes the market. He gets you in at a small price and gets you big multiples on your money, and it's how he structures the trade that's so unique. It's something you really have to see to understand, which is another reason we give you that 7-day free trial. He also started a challenge account where you put $4,000 into a small account and trades mini ES futures on disciplined trading methods averaging 3 to 4% gains per week, showing you how to build a small account into a huge retirement savings account. Guys, we'd love to have you in these rooms so we can make some money together. All right, key takeaways for today. 2 paths. We're looking for a move up, okay, in this A wave towards the 4,000 level, then a move back in B, and then ultimately up towards 4,200 in that range to challenge the August highs as our primary. If not, we could be seeing a bigger wave 4 here with all of wave 3 down, and then having wave 5 down over here in our 3,250 to 3,450 range. On the NASDAQ, same type of setup, and now that they're synced up, we're getting the same type of count, which is good. Looking for that A wave up towards the 12.8 area, and then a pullback towards 12,000, and then a push up towards the 13.6 to 14,000 range, challenging the August highs, where we should see a C wave down from there, depending on how this structure plays out. Guys, it is the weekend. Have yourself a drink, enjoy your family, go out, enjoy the weather, and I will talk to you next week.